What's going on, guys? Philip at Trade Genius. Hope you guys had a good weekend. We're going to talk about this hot mess of a chart over here. Also revisit our S&P 500 chart and basically go over the structure and where we're at. There's a couple levels here I wanted to discuss. And the reason for that is because it's going to greatly affect what Bitcoin is doing. We still have correlation. I want to discuss this chart and this pattern and our correlation over here, especially if you look on the 30-minute chart, just talk about how that's going. Also, guys, we do have specials running. Just want to let you know, these sniper buys, we run these on the Forex, and when you guys sign up, we're going to give you the buy signal on these. And you can run this on anything, Forex, but like this is an example of how you can have a bunch of Forex charts up, run alerts on these and get notified when they fire. I like to do them on the 30-minute charts on Forex, but they apply on anything. And in Nadex, whatever products that you have out there that you can trade, whether it's commodities, Forex, even the equity markets, you can take contracts out on those and pick strikes that are hiding safely behind the bottom of these candles, for example. So there's a lot of different ways you can do that. We're including that in our package specials. So $3.99 gets you in the room. Our ribbon indicator system, which is really, really good. We're basically have a whole series, video series that you'll get access to be trained on how to use that. And we're using that exclusively in the VIP room where Bob and I are calling out. You can also find out about getting in there with us as we trade the equity markets during the day. So head on over there, check it out, guys. Hope to see you in the room. Otherwise, let's dive into this video.
Trade Genius.
All right, guys, so when we talked about this chart, basically what we were doing was comparing how this followed 2008 and how we had these similar little relief rallies. You had the first large down leg, but you had these little relief rallies in between. This rally here, like 2008, was longer and extended. Now, that being said, we noticed, if you notice here, in this area here, we kind of found some balance in this area. And so I drew this line, and I said that if we break out of this area, these lines from last week's video, I'd be looking for that to give us direction. So what happened was on Friday, we actually did break above that. Now, that tells you that, we were breaking out of the current, basically the consolidation and the balance that was in this area. However, we did not break above the 2870, or we got really close right on it, which if you look back at that level, there was a lot of congestion in here, and the fact that we couldn't close over this congestion was kind of telling. So now we've closed back under today, and a lot of today was based on the chart we're going to go over next, but you'll notice we're kind of back at that support area down here with price, and we could actually pull back some. That would not be, especially for the rally that we've had up, wouldn't be much to get a pullback, back toward 2760. Now, breaking below that, I think we might start talking about resuming the overall bear market move down. So what happened today? Well, it was really the tale of two sessions. We had a bullish morning, and then as oil closed, oil really started to drag down everything. And it even dragged down on Bitcoin because, as the S&P 500 is going, Bitcoin's tagging along. And you'll notice that this is kind of this is a daily chart of the S&P 500 overlaid on the U.S. oil futures chart. And as you can see, oil has fallen off of a cliff, so much so that for the first time in history, oil futures went below zero. They went negative. The people selling the futures contracts, they were essentially, when you're paying people to get rid of, you have stock that it's just a supply glut. There's no demand. You're paying people to take your product at that point. Crazy amount of price action, negative, peaks out at negative $40.35. I mean, we're talking mind-blowing price action here, folks. And the reason for that is there's no demand. You've got delivery costs, and people literally will pay you to take it away. That's, you know what I mean? So it's a very bizarre upside down world right now, but that is why that happened. And when there's no demand and you got a certain amount of delivery costs, and there's more to it than that, and that's really an entirely different video, but that's how you can get into some of this upside down pricing. Now, you'll notice that when we look at the market, the S&P 500 in this blue line, you'll notice that oil started to lead lower, and then price started catching up with that price action, and then actually overshot oil. Oil actually started to hold up a bit, and then price bounced and caught up with oil. Now oil's puking again. So actually, you could say oil has been leading the moves. Oil tanks down, makes lower lows first, and then price follows down here. Price gets over exuberant to the downside. Oil actually starts to make a higher high, and then S&P 500 follows suit, making a higher high. So, it's this rolling over. Watch for oil to lead lower here on the stock indices. Remember, it stopped going down here, okay, and the stock market makes a lower low here, even though oil has started to make a higher low, okay, and then barely ekes out a lower low, but really was, the low was here on it, and then it finally starts to turn up, and then we see the markets follow suit and catch up. So that's why I'm saying it looks like it's leading the markets when markets are coming down. But this here, not good. Now, this is the May contract, and so the next following month contract is trading up at $20. So if you see that oil is negative today, and then tomorrow you see the prices are around $20, that's why it's the next contract expiration. But watch for that to lose value. If it starts to lose value, we could see that's, again, we got to watch this price action. But this kind of activity, especially on a commodity like oil, is going to have very, very negative effects on the economy. A large chunk of our GDP is oil related, especially down in Texas. And it's really putting a pinch on those guys down there. So, if you got people that are in that business, I feel for you guys. It's a tough spot to be in, and I think oil really is reflecting the state of the economy. I mean, you could see where oil peels off and kind of stabilizes here, and now it just rolls over because the demand destruction is being realized here. And I think that this move up, while oil was starting to get weak and roll over, and this move up, and you could say it was overdone to the downside on the S&P 500, and you can make an argument for that. And we have a big, fierce dead cat bounce, but we're looking to roll back over here. Similar to what we thought we might get here, and then it was bought back up. But I think this move has been really largely extended. This is what was weighing on the market today. All right. So the key here would be to get a close back above this level, back above 2870, and then I think you can attack the 2930 level, thereabouts, the 618 fib retracement of this entire move. However, know this, the news cycle is behind the price cycle. And what I mean by that is when market is dumping here, so the top of the market was 20th of February, the smart guys in the room, the guys that work for the big funds, the guys that are crunching the virus data, they're looking at what's happening. They got inside intel, what's going on. They see the shutdown coming. They know that we're going to lose 20, 30, 40 million jobs. That is why this sold off. Okay, that is why this sold off. And then with most markets, when you have a hardcore sell-off like that, you are going to get to a price point where short-term buyers are going to come in because of such a steep short-term discount, and you will get a relief rally. That's why this thing was bouncing up while all of those negative employment numbers were coming in, because that was already priced in this move down. Okay, so that's why things seem upside down when it comes to news. Now, watch this week. IBM just reported earnings. They're positive. They beat estimates, I should say. So you would think that that would just bolster things higher. But what happened? Nothing. We sold off toward the end of the day in the S&P 500. And then even after hours, when those earnings were announced, very little lift. I mean, it was just totally lifeless. So last week, any type of positive news, like on the virus vaccine, boom, rocket ship up higher. Now, not so much. So again, you might get into another confusing array of news versus price action that just seems mind-boggling, where you might have actually decent earnings. And again, these earnings will beat estimates, but the estimates may be down because of what's going on. But that's why we might have a good earnings week and actually watch this market roll over. This market rolls over and Bitcoin's rolling over. So brings me to this chart. This is our Delta chart. Now, I know a lot of times you're going to look at linear trend lines for breaks and things like that. But a lot of times what will happen too is you actually will get these arches that will, rounded top formations in Bitcoin. And so currently I drew this, I showed this in the room, and actually this price action bumped its head above it and dropped. So I drew this before this drop that we saw today. And right now the Delta, which is measuring what the futures contracts are doing for Bitcoin, is starting to go short. All right. So right now I would wait. We got a couple hours on this bar, but if we see another Delta, which we'll share in the room, but we get that third Delta bar to confirm later this evening, short, essentially what we're going to be looking at is is fading moves back up to these moving averages. So what we wanted to do was be buyers of this moving average, like we saw here, buy, and this supported, and then it started to break down, and then the futures rolled over. So it breaks down, you buy that moving average up, but once that breaks, if you're still long in that trade, you stop out. So we were actually looking at the data. I was looking to get short, and some of you caught that move down in the room short. Some of you stopped out at break even. Just kind of depended where you went. But now Delta is telling us to get short on any move up right now. So we're going to monitor this, but to me, that's a big tell. And, I think the risk right now is downside in the S&P 500. I think they're setting up for when you sell the news, right? You run up into earnings and then you sell earnings, even though earnings are good. It'll make no sense, but you have to understand the market is cycling ahead of the news. You could say that if they knew already earnings were going to be good, and trust me, these guys know, they can run up into earnings. And then once earnings hits, they sell because look, the fact of the matter is you're not getting any more 401k contributions into the market, no more 401k matching contributions into the market. That's billions of dollars daily. That's not funneling into the market. Basically, the Fed is backstopping this stuff, which is why this is even going up anyway. But I think oil is a big tell on the demand destruction and really the fact that the economy is just shut down for business. So don't be fooled because we're going into halving unless Bitcoin can somehow decouple, but I just don't think we're there yet. And yes, I would love to see Bitcoin run up into the halving. I think that if this wasn't going on and we didn't have COVID, I think Bitcoin would be off to the races by now, well north of 8,000 going into halving. But look at reality and what's going on. As you can see, the market here on a 30-minute chart comes down, and markets closed through this period. Bitcoin kind of just chopped up and down, and then market reopens and drags us lower, drags Bitcoin down. And so now any kind of pop is really the short side of the trade here, unless something fundamentally changes outside of what we're looking at right now. But I don't really see that happening. I see probably just a lot of risk to the downside. So just bear that in mind this week with Bitcoin. We'll be looking for shorts in the room going forward this week. All right, guys, so that's it. News doesn't seem to matter. The reason why is because it's just a cycle behind what's going on. What you're seeing priced in today is what you're going to be seeing in the news later. All right. And what happened on this run up is probably pricing in the fact that we're going to have good earnings. That's already priced in. Now they're going to sell into the dumb money. And potentially, I think today with oil going negative, guys, I think that is just really, really something else. You're talking a peak of minus $40 plus. Unbelievable move in oil. So be very, very careful out there, guys. Be very defensive. And again, I think this market being on your toes, being in and out is going to be the best way. Long-term holds on stuff in the market right now is going to be very risky, especially if you're long. If you've taken some profits, if you're short-term, you've taken a lot of profits coming up off of this bounce, pat yourself on the back, but I'd start protecting that profit margin too. We got to get above 2780 in the S&P 500 to give us any hope of this thing going higher. But we've come a long way. It's reasonable to expect we're going to pull back. And when we do pull back, this area, this 50% retrace of that pullback, part of this down leg, number 3 push down, going to be hugely important for the market. We start losing that, probably going to take out these lows, and that's going to be right now everyone's trying to guess when the economy is coming back, and I think that will be priced in early, and you'll see this market bottom ahead of when that becomes realized, because they'll know these guys have the smartest guys in the room figuring this stuff out. And they'll get an idea on that, and that's when we'll see the market bounce. All right, guys, that's it for this video. I hope it helped. Please hit like and subscribe. Really helps out our channel, helps out in the Google algorithms. So if you could do that, I would appreciate it. I will see you on the next video. And again, if you're interested in joining us in the room, head over to tradelikeagenius.com or tradegenius.co and check out our products. Thanks, guys. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.